Hello traders, Gary Wagner here for Trending Markets. Just after 10:30 in Honolulu, 4:30 in New York. Equities markets have closed for the day with moderate gains across the board. Dow Jones Industrial Average closing up about 76 points on the day, 16,330 in terms of the close itself. Now, I am looking at a weekly chart, and we've been talking about the fact that when we look at recent corrections in the market, they have been absolutely defined by almost a single candle type. And that candle type is either hammer-esque or a straight hammer. You can see that here, you can also see that here. In other words, the market's been moving up, hits a defined top. As it comes down, the key characteristics is that you get that extreme low in the market. We'll go ahead and blow this up just a little bit, but you get that extreme low in the market, and the market recoups over the week, where the net result is that you're actually closing very near the open of that week, and that's why you get this small body. We've seen it here, we've seen it here, we've seen it in a number of instances when we have seen corrections in the market. That extreme low has really been the key characteristic or indicator that's told us we had a potential bottom. And so it's not a huge stretch of the imagination when we got this candlestick, which occurred 3 weeks ago, and that's the week of that dramatic sell-off. The fact that it closed very near the open of the day to give us that hammer-like candle really had me believing that we were most likely seeing a really strong potential bottom in the market. However, nothing could have been further from the truth, because the following week, rather than seeing the market really recoup, as you have on all of these occasions, in other words, anytime we have had this hammer come into the market, the next week was followed by a green candle, meaning that it opened and then closed higher than the open of the week. We didn't get that, of course, last week. However, this week, we've got a couple of things that are very, very noteworthy. If you look at the open here and compare it to the close, so it opens very, very near the close of the prior week. It's absolutely trading higher. Now we're at Thursday. We are well off of the highs of the week. We're at about mid-range, but the candlestick pattern that this is forming in terms of a simple 2-day pattern is a piercing line. However, there is a variation off a pattern. It's not quite perfect, but a variation off a pattern that's called a unique three-river bottom. You can go ahead and Google it. And what that is, it's a variation off a three-river morning star. And the formation is that you get a large red candle, which is really your last move down in a defined downtrend, but then you get this extreme low that comes in, so you'll get a small bodied hammer-like candle, and that is followed by a green candle. The reason this is a variation is this particular candle here really would not be in that pattern type or pattern group. So in as much as this pattern type, that unique three-river bottom, we are looking at a potential variation of that. It's absolutely noteworthy, because what we are trying to ascertain with some degree of confidence is the fact that this correction that has been really prevalent in the market has absolutely concluded. Because the key is that we've seen a dynamic growth in this market. When you consider that back in 2011, we were at 11,000, we went up to over 18,000. The fact that we've corrected to about 16,000, to me, is a good thing. Because once we do get confirmation that we've hit some sort of a real level of support in this area, we can look forward not only to a rally in the equities markets, but a rally that takes us to new highs. So traders, lastly, I do want to take a look at crude oil. We did initiate a short position just the other day. That position, of course, with this market up about $1.50 a barrel is about $1.50 against us. We do have a stop. That stop is still $1 from here. And I want to give you an idea as to why we put our stop where we put that. If you take a look at these most recent highs up here, they come in at around 46.50, 46.60. And so we are at the upper levels of that particular chart. As I said, currently trading at 67. But my sense is that I would look for the market to hold in this area, and I still believe that this market, in terms of overall moves and potential, will begin to move back lower. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.